The Magnificent Seven: Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla aren't just the most valuable companies in the world. Together, they've grown so large that they now make up nearly 40% of the entire S&P 500. For many investors, owning these stocks feels like owning the future. But here's the catch: size doesn't always equal opportunity. History is full of examples where legendary companies turned into disappointing investments, simply because investors paid too high a price. Before I go, make sure you subscribe our channel, okay? In this video, I'll rank the Magnificent 7 from worst to best, not based on hype or popularity, but on realistic return potential over the next decade. Before we jump into the rankings, let's set the foundation. Every stock, no matter how exciting, is just the present value of its future cash flows. That means what you pay matters just as much as the business itself. The companies we're about to rank are all extraordinary. But if the price is too high, even the best business can deliver mediocre returns. With that in mind, let's dive into the list. Tesla is often described as more than a car company, a leader in AI, robotics, and clean energy. But the reality today is that nearly 90% of its revenue still comes from selling cars. Compared to Ford, Honda, or Volkswagen, Tesla trades at an enormous premium. It's valued like a high-growth software company, but it operates in the competitive, low-margin auto industry. Analysts expect Tesla to grow, but not nearly fast enough to justify today's price. Based on current valuation, Tesla could easily deliver returns near zero, or even negative, over the next decade. Amazon has doubled its revenue and tripled its profits over the past 5 years. Yet, the stock price has barely moved. That's a lesson for investors: even amazing businesses can disappoint if expectations are too high. Amazon's e-commerce platform, cloud services, and logistics network are unmatched. Analysts expect solid growth ahead, but the stock is still priced at a level that leaves little upside. At today's valuation, Amazon may only generate low single-digit annual returns. Microsoft has a fascinating story. After the dot-com bubble, investors wrote it off. But under new leadership, it reinvented itself with cloud computing, enterprise software, and smart acquisitions. Today, Microsoft is a financial powerhouse with consistent growth and incredible margins. But at a market cap over $3 trillion, most of that strength is already priced in. Investors buying today can expect around 5% annual returns, steady, but far from explosive. Apple used to be considered cheap. Now it's one of the most expensive big companies in the world, trading at a PE ratio of around 35. There's no denying Apple's strengths: enormous cash flow, a loyal customer base, and an expanding subscription ecosystem that makes its business more stable than ever. Analysts see moderate growth, but because of the high valuation, Apple is likely to return only about 6% per year going forward. Nvidia has become the poster child of artificial intelligence. Its chips dominate the AI market, and its stock price has skyrocketed to make it one of the most valuable companies in history. The challenge? Growth is already slowing. Triple-digit revenue increases can't last forever, and at a $4 trillion market cap, it's nearly impossible to sustain that pace. If Nvidia continues to execute well, investors may still earn around 7.5% per year. But expectations are sky-high, leaving little margin for error. Google remains one of the most profitable companies in the world. Its digital advertising empire and YouTube dominance generate billions in cash flow. Yes, it faces regulatory scrutiny, but its core business remains resilient and continues to grow steadily. Analysts expect strong revenue and earnings growth in the years ahead. At today's price, Google looks capable of delivering about 8% annual returns, making it one of the most attractive of the 7. Meta, the parent of Facebook, Instagram, and WhatsApp, was left for dead in 2022. But its rebound has been nothing short of remarkable. With billions of users worldwide, Meta still has untapped growth potential, especially in international advertising markets that lag far behind the US in monetization. Analysts expect both revenue and profit to rise significantly in the coming decade. Based on today's valuation, Meta could deliver around 9% annual returns, the strongest of the Magnificent 7. So here's the big takeaway: all 7 of these companies are incredible businesses, but most of them are priced for perfection. Even the best opportunities, Meta and Google, are only projected to return single digits. On average, the Magnificent Seven may produce just 3 to 6% annually over the next decade, not much higher than the S&P 500 itself. The lesson for investors is clear: great companies don't always equal great investments. The real skill is having the patience to wait until these giants trade at prices that offer true long-term value.